Hello, this is Brian Rezny, President of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Let's talk about Trump's tariffs, protectionism, or smart move. Folks, let me tell you what, the markets are a little shaky right now. We've all seen it. We've got a pullback in the market around 12 to 15%. Remember, I've warned all year that we're going to get some kind of pullback. We don't know when it's going to happen, how severe it's going to be. Could we go down another 5 or 10%? We sure could. But we've had this pullback. Let's talk about it. So why did President Trump institute these tariffs? He talked about it on the campaign trail. This was needed. Stocks have slid because of that, and in our view, it's temporary. So remember, it's a little messy at first, but I'm still all in on the tariffs, and I'll tell you why. We're going to have some short-term pain for some long-term gain. I've said this before in my updates about the pullbacks, which are natural every year. Statistically, we get about a 20% pullback in the markets every 18 months. We haven't had one in about 2.5 years. So this is well overdue. We don't know if it's going to be deeper and if it's going to last 3 months or 12 months, but the bottom line is we've had a pullback. Remember, we're looking to buy, we're looking to add to quality positions. We're not emotional investors, we manage money. I'm glad to say that we received not one phone call or email from any clients of concern. That's good. That means that either we've educated you well that this is normal and natural and nobody likes it, but it's expected, and you're listening to these update videos, which again, I'm glad you are. So remember, our view hasn't changed. Buckle up for some bumpy roads the first half of the year, as I've discussed back in January multiple times. This won't be a quick fix, but the long game for the U.S. economy will be stronger and more steady. So let's talk about it. There's some folks right now that are screaming recession. Remember, legacy media is going to hype everything. They want you to watch Fox News, CNN, doesn't matter. All they're going to talk about is, oh my gosh, the world's coming to an end. The world is not coming to an end. I don't see signs of recession. Are we going to have a little bit of a slowdown? Potentially. But tariffs are bringing people in line. Think about this. Already since the tariffs were announced just last week, 50 countries out of the 60 have already contacted the White House and are already talking about negotiating. And why is that? Because these countries need us more than we need them. This is big. So again, out of 60 countries, already 50 or more have contacted. There's already negotiations that have started. It's very, very interesting. If you take a look at what's happened, when we had NAFTA, Canada, Mexico, the EU, all of these different trade agreements really were just bad from the get-go. If you go back 40, 50 years, the middle class in this country were the backbone of the U.S. That no longer exists. You either have people with a lot of money or basically most everybody has no money or little money. That cannot continue. So what this president is doing that no other administration has done for 40 or 50 years is he's leveling the big playing field that we have. He's basically going to bring manufacturing and jobs back to the U.S. over the next 5 to 10 years. He's going to equalize and make fair trade, reciprocal trade, that basically doesn't have all these tariffs on it. Two big pieces of this puzzle, let's break it down and keep it simple. Reciprocal tariffs, the easy fix, and that's basically, hey, we're going to trade with you, you trade with us, and there's not going to be any of these crazy slapped on 20% tariffs like we're seeing from India. Again, if they give us 20%, we're going to give them 20%. That's how we're basically going to do it. These things will work out themselves, and I think this part will be fast, meaning these tariffs will ease themselves, I think, in the weeks ahead. Then there's going to be the other part, the trade imbalance itself. This is a little bit trickier. This is going to be a bigger fight. The U.S. buys more from other countries than they buy from us by about $1.2 trillion alone last year. This is the biggest, we're the biggest economy on the planet. So you throw tariffs in there, and obviously we can fix this gap. These are things that can be corrected. So right now, Canada's got 25% tariffs. Britain, Switzerland are 30%. These are just in the last 48 hours. Behind the scenes, countries are scrambling, as I made a comment earlier. They are nervous. Countries are nervous. We should not be. We're going to fix really mass abuse against the U.S. inflicted by Democrat, Republican politicians by bad policy for decades. We're going to fix it. So just think about that. They've got two options to fix it, by the way: buy more American goods to rebalance things, or just ditch the tariffs entirely. These things will happen over time. Let's talk a little bit about China. China's a different beast. China's not like the other countries. China's problem is not only tariffs and abusive trade practices, but it's all the other stuff. They're dodging rules, they're stealing intellectual property, they're blocking businesses from coming in, they have sketchy court systems, they're ignoring all of our security regs. No past administration really ever tackled this before, none. Trump is actually doing this. This is actually holding China accountable. China wants to dominate the world. They want to take over the U.S. They want to take over the world. Remember that. They have a 100-year plan. China's going to be in big trouble because of this. This is going to help reset the global order in a more positive fashion back to the U.S. I firmly believe the next 3 to 5 years, investors are going to be extremely happy that they're invested in the U.S. In the next 5 to 10 years, as we start bringing back more jobs, more manufacturing, and more businesses to the U.S., I think the next 5 to 10 years could be one of the best opportunities for the U.S. economy growth and the U.S. stock market, period. So remember, volatility is normal. We're going to have more of that. Markets correct every 18 months, as I talked earlier, sometimes up to 20%. You're seeing it now. It's not fun. Nobody likes to watch their portfolio dip, not even for a minute. But remember, it's like going up 5 or 6 steps on the stairs and coming down 1 or 2. Going up 5 or 6 steps on the stairs, coming down 1 or 2. If you're a client of my firm more than 5 years, you've gone up and down those steps, 8, 9 steps, and come back 1 or 2 steps at least 3 times in the last 5 years, and your portfolio is worth more money. So remember that. Don't look at the high water mark. Look at where you started. Look all the money that you've taken out, and look how your portfolio has done the last 5 years. If you're a client for 10 years, you've had at least 6 or 8 different drops of between 10 and 30% in that 10 years. You've taken money out, but you're worth more money. What that tells me is that's how the markets work, and that's non-emotional investing. The only clients that don't make money are the emotional clients, that want to liquidate their portfolio when things are bad. Remember, you always hear the saying, buy low, sell high. Well, guess what? Most investors don't do that. We do. But most investors around the country, non-clients of our firm, I get these calls every day into the office on my TV radio show. Investors like to sell, basically, or buy high and sell low. This is what the average investor does. This is why 80, 90% of investors don't make good returns and don't have much money. And they overspend. So unfortunately, this is the scenario we're dealing with. So again, volatility is normal. Expect more of it. You don't like it. We're going to get through this. These tariffs will end, in my opinion, in short order, and then we start the other part of really the negotiation and getting these countries back in line in a better way. Remember, these negotiations have started, and these 60 countries have been on notice. The majority have already contacted. This is great. Everyone has skin in the game. We need to settle this and sort this out. Let's talk about Canada, which is another wild card. Special case right now. They're in a mid-year election. The Prime Minister right now, Carney, isn't even elected. He's just filling in the roles because Justin Trudeau got booted out because of his bad policies and mismanaging the country. He's got no real mandate. He's also flip-flopped back and forth on all kinds of issues. 25% of Canada is in poverty. Their economy is flatlined for a decade. They have had no growth in their economy for a decade. Think about that. Our growth in the U.S. economy, I believe, is somewhere close to 40% in the last 10 years. That is huge. He wants to blame tariffs. Canada is bleeding cash in a bad way. Tariffs might sting, but they're not the root of the disaster for the U.S. nor the rest of the world. But they're going to fix the picture. Remember, Trump's Commerce Secretary Lutnick, Treasury Besant, these are not dummies. These people are not reckless. They know what they're doing. Negotiations are always going to be messy. Remember, they're betting on an economic upside, more U.S. jobs, stronger manufacturing, better trade deals, long-term trade deals. A little short-term pain is really a long-term benefit for investors and the U.S. economy. As always, if you have any questions about your portfolio, any concerns about your money, you'd like to talk to me on the phone, let's have a discussion. But remember, emotional investing, we don't do. Emotional investing, you should never do. If you allow us to do our job in the next 3 to 5 years, I firmly believe you're going to be an extremely happy client, like you've been the last 3 to 5 years. And I firmly believe you'll be a wealthier client in the next 3 to 5 years. As always, have a safe and profitable day.